Morning, everybody. This is Mark. We're back here for the morning call. It is Wednesday. For a minute, I thought it was Tuesday. So basically, we're up again this morning after a pretty steep sell-off yesterday. We were down 300 plus points. I don't think we closed right around, not quite near our lows. We bounced a little bit. We did hold that key level of the breakout from Friday. The 190-ish, even though, for a second we penetrated below there. Overall, guys, this market is going to stay volatile. I think you just got to remain, flexible in every decision making, in every decision you are making. I think that's really the best approach I see to trading overall. Oil, we decoupled from oil for about a day and a half, and then yesterday oil was down, closed a little bit below 30. We're now above 30. So it seems like we're going to just try to flirt roughly around the 30 level for a little period of time, and 32, 33 will probably be that resistance. I think we hit 34 on the way up the previous time. But you can look at the USO, or obviously you can look at actually crude itself, which is up this morning. If you want some bang for the buck, you can look at DWTI, which again is the ETF, which does trade, it's up or down 30, 40 bucks every single day. So you just got to understand and respect how these things trade accordingly. Stock-wise, we had Google yesterday morning, which basically the high of the day was in right at the open, and it closed almost on its lows. And, it's up a little bit this morning, but great earnings. It's going to be a go-to stock, but at this point it probably needs some time based on what I'm seeing on, the charts. Facebook, we know it's a go-to stock at this point in time. It is the anointed leader at this point based on the earnings, but had a very good run. Yesterday was that little reversal day. We're up a little bit this morning. I would expect to see a digestion. Digestion could mean a little bit down. Digestion could mean a little bit up. So you got to pick your spots accordingly across the board. Earnings today, we had CMG, which was after the close yesterday. Not unexpected. They're lower. They missed lower expectations based on the E. coli that was basically in the cards at this point in time. And you had a little bit of a gap up, before it. So we're basically back down to that 450 level, 445 level. See if it can hold. If not, I think it looks like below, I don't know if it's 430, 435, possibly some new shorts will come in. I think it's just going to hover around here. It's down, I think, $29 already this morning in the AM. YHOO, not great earnings, but that wasn't expected. It's basically trading below book value. There might be some action that comes to it, but overall, nothing that compelling. High beta, take away Facebook and take away Google, really has not been acting great at all. Netflix, basically right at lows. I'm assuming it's probably gapped up a little bit this morning, but look at that 90 level as a key level. Breaks there, you're probably going to get a new wave of selling. Accordingly, it looks like a little bit of a bear flag is forming. Understanding it's a $5 range, so you can trade it from the long side, from the short side. Know your ranges. Understand the daily travel range of these stocks. I think it's important. But overall, that is the range that it is forming, and it has to prove itself at this point in time. Tesla, I think, is in the same category, even a little worse. It actually just made new lows yesterday, so it will be up a little bit this morning, but it's on a consistent downtrend no matter what type of news comes out. Elon Musk buying, executing options, but again, executing, I think, $4 million in options for $100 million, something to that effect. It was basically a no-brainer. At lows, really not a whole lot. You'd have to probably go back to your weekly to see if there's any sort of support coming in this idea at all. LinkedIn is tomorrow, so we'll have to wait and see if that is one of the last, it's not a FANG stock, but it's one of the last to prove itself across the board. Overall, guys, I'm pretty, agnostic, I guess, on this market. I'm really trying to take very little overnight. I think it's very difficult. I think it's, not very difficult. I think there's basically good ranges. And if you can capitalize on the ranges and really be able to pinpoint where you want to buy or where you want to short, I think you'll really be in a good situation. The bios were weak yesterday, and you can just see on the chart they're very, very weak, regardless of they have a bounce here and there. Gilead came out with earnings today, and it's almost in that gap. It has to prove itself. It's still a bad-looking chart. It's going to need more time across the board. You know, I think go-to stocks in that industry, if we start to get a bounce, obviously I still like a CELG. You know, BIB has to prove itself. I know Blue got an upgrade. You know, it's something we haven't talked about in a while. But again, these stocks are just beaten up, and they're really in the doldrums. And you know, chart-wise, I don't see a lot I'm excited about. I know we are up this morning, probably about 100 on the in the market overall. But overall, not that exciting. Not a whole lot of fanfare. See if we're going to continue to decouple from oil, or we're right back to where we were, where any news in oil, you know, brings the market, you know, to a little bit of a scare. But overall, charts aren't telling me where, you know, there's a rush to just buy. So, you know, what that means to me is basically factor in prices accordingly and look for levels that you can get involved with and try to really take advantage of some of these stuff. You know, the Chinese stocks, BABA came out with, you know, not great earnings, and now it's obviously working its way lower. It seems like that next level possibly could be 60. How it's going to get there, not sure, but it's definitely going to make itself a little bit harder. And you can see, let's go to the defensive stocks that really where money is getting put. J&J, good looking chart, hanging at the top end of its range. McDonald's, at new highs basically, hanging at the top end of its range. That's not working. Now Costco, I thought was going to look better than it did. You know, Under Armour had decent earnings, but now has some more to prove. Maybe at 77, I'll look to get involved. But again, this one could pull back also. So overall, guys, I think you got to be a little bit smarter on your execution. Respect the fact that we're up today. I would not be buying. I would not be chasing any 1% up move or 1% down move in this tape. We've been having action every single day, so if you can actually let the stocks play themselves out for their early morning, you're going to see relative strength and relative weakness. There's going to be both. This market is definitely differentiating between the tops and the bottoms, and you can see it intraday from an intraday basis, understanding we might miss the meat of the move overnight, but then you're also reducing some risk that quite frankly is a flip of a coin in this tape. You know, up one day, 10 handles, 12 handles, down one day, 20 handles. It's how this market is trading. That's what happens when the volatility kicks in. We're still, you know, at that level where heightened volatility, I think, is to be expected. I don't think we're getting out of this anytime soon, where normally, you know, it would have already ended by now, the volatility, based on our past, you know, few years of movement, maybe minus 1 or 2 periods. Normally it lasts 3 to 4 weeks, and then we're back to normal. I think that's, you know, not going to be in the cards this year. I think we're going to remain volatile. Which means you got to be a little bit more cautious both ways, because you can get a rip your head off rally that doesn't make any sense, and you can get the other way. You can get a straight sell-off when things look perfect. So that's how I'm looking at this tape right now. Today, same approach. Going to wait for the morning to play itself out, see if I find an opportunity to look to buy or sell. But overall, I think we need a little bit of a break. In Facebook, I think digestion. So if it goes up another buck, you know, buck 50, might be a place to take some trades. If not, even look for a new short. And obviously, I went through all the others that I'm looking at. Good luck today. I will talk to you all tomorrow. Later.